Well, sir.
Yeah, how's it going?
How are you?
Not bad. How are you?
Good, thank you. Yeah. So, yeah, do you have a presentation you want to share, or?
No, I'll just wing it.
Wing it?
It's only 15 minutes, so we'll keep it short and sweet, and then answer a couple of questions from the community.
All right, sounds good. I'm going to disappear. Best of luck.
Hi, guys. A quick introduction. My name is Tushar. I'm the CEO and co-founder of Persistence. Have been in the industry for about 4.5 years. Done different things. So I used to be, much like Kenneth, I used to be a podcast host. My podcast was called Decrypt Asia. Started writing about crypto on platforms like Tech in Asia, which is the equivalent of TechCrunch in Asia. And then I got an opportunity to be the first employee at LuneX Ventures, which is the crypto arm of a traditional VC in Southeast Asia called Golden Gate Ventures. Deployed capital, so set up the fund, raised capital from a bunch of public, from a bunch of institutional folks, deployed that capital into equity deals and multiple crypto investments, both in the primary and secondary markets, but wanted to be on the operator and entrepreneur side of things. And so that's how Persistence came into being. High level, our journey has been very similar to that of Terra, where you have Terra as a tenement-based platform or chain, and then you have Chai as a non-crypto user-facing application, and you have Anchor Protocol, Mirror Protocol as sort of crypto-native applications developed by the Terra team. So we've gone through a similar journey where Persistence is a tenement-based protocol. We have Comdex as a third-party application focused on synthetic commodities, and we have pStake as a liquid staking project, which I'm super excited about. I was just listening into Liam's presentation and conversation about Stuffy. I've been following Stuffy's journey as well. He's mentioned Lido. Have followed the Lido journey very, very closely as well. With pStake, what are we doing differently? I don't know if there are folks in the audience that have used liquid staking platforms, but essentially high level to in a nutshell, talk about what liquid staking is. Essentially today you have a bunch of POS coins, like ETH is going to be a POS coin once the merge happens and it transitions from being a POW to a POS coin. You have DOT, Atoms, Near, Solana, all variations of some sort of variation of a delegated proof of stake consensus mechanism. Essentially when you stake your Sol and when you stake your Atom, you stake your DOT, you earn staking rewards, which is great. But those assets which are staked cannot be used for anything else. So essentially what a liquid staking platform does is issue a representative coin that gives you ownership of that underlying coin that is staked. But this representative coin can be taken into the DeFi ecosystem for various things. So whether that is using that coin to supply liquidity to a DEX pair, whether that is using that representative coin to use as collateral to facilitate borrowing, lending. So those are some of the use cases for which a representative coin can be used for. So you keep earning staking rewards in the background, but you can also borrow against that asset which is generating staking rewards. So that's the kind of high-level thought process. Sorry, I got a little distracted. So that's the high-level thought process. If we think about it, if you go to DeFiLlama.com, I think the TVL in DeFi across all chains today is about I think $220 billion as of today. But if you look at the POS staking market cap, according to staking rewards, I think it's sort of north of I think $300 billion. Although I think it was like north of $600 billion. I don't know why that change has happened recently on the stakingrewards.com website. I think it may have something to do with one of the assets and how it's classified. But anyway, what we're trying to do is bring these POS asset coins, POS assets, whose market cap is larger than the combined TVL in DeFi right now, into the DeFi ecosystem, where these POS coins, while earning staking rewards, can be used for a bunch of other things, like I mentioned, which is liquidity provision to a DEX, or facilitating borrowing, lending. High level from a team perspective, I was, and from my personal journey as well, I was not early enough in the industry to be a Bitcoin miner or an Ethereum miner, but was definitely early enough in the industry to get into POS mining or validation super early on. The team at Persistence, we were involved in the launch of the Cosmos Hub as well, which was, I think, the second delegated proof of stake chain to go live after Tezos. And since then, we've been involved in the launch of multiple other POS networks. We also run Audit.one, which is our validation arm, where we're validating for about 20 networks across Cosmos and non-Cosmos based chains. And then Persistence itself, like I mentioned, is a Tendermint-based POS protocol. So we've had, based on the meandering journey that we've had in this industry, where we've launched other POS networks, where we validate for POS networks, where we've launched our own POS network, we've developed good expertise and capabilities and interest in staking, which has kind of led us to create pStake. In terms of where we're at for development, so the pStake platform, the ideation kind of started in Q4 2020 when we did a stake drop campaign for XPRT, XPRT being the native token for Persistence. So Luna, Kava, Matic, and Atom stakers, if they did certain steps last year, would have received an airdrop of the Persistence coin. Within a 3-month period, we had more than $1 billion worth of staked coins that were participating in the stake drop campaign, which kind of showed to us the humongous amount of demand that there is in terms of generating additional yields from already staked assets. So that's how pStake came about. Because we had the strongest community and expertise in running Tendermint-based in Tendermint projects, we decided to go to market with STK Atom, which is the first representative coin. And then the second representative coin is called STK XPRT. One of the key differences between something like a Lido is that instead of doing the asset issuance on the native chain, so what Lido does is they issue STETH on Ethereum, they issue ST Sol as an SLP coin on Solana. We do the asset issuance of the representative coin right now as an ERC20 coin. So even though atoms are being staked in the background at the Cosmos Hub level, the representative coin, which is STK Atom, is being minted as an ERC20 coin. The thought process behind that was that Ethereum today has the maximum amount of composability and liquidity. But now that the Cosmos ecosystem itself is flourishing with the launch of Gravity DEX, Osmosis Zone, borrowing lending platforms like Umi, we'll be doing asset issuance on Persistence, which is an IBC-enabled chain, so that the STK Atom can flow over to Osmosis DEX and some other Cosmos-based platforms in the future. We did a capped launch where you could only allow supply a certain amount of atoms per week. The uncapped launch happened in the 4th week of September last month, and so we've been live for about 4 weeks. We have a TVL of about $18 million with 2 assets, STK XPRT, STK Atom. We've also created pools on Sushi, so STK Atom ETH and STK XPRT ETH pools on Sushi, which have a decent amount of liquidity as well, especially the STK Atom ETH pool. And so from our perspective, we'll be increasing the use cases for these staked representative coins over time. So starting off with creation of liquidity on DEXs. Second is creating of borrowing lending use cases, and then ultimately moving on to passive strategies where folks can hold on to index funds, where you're sort of betting on POS coins increasing in value, but also generating fixed income returns in the short term, or having a vault strategy where you just supply stable coins and those stable coins get deployed to a bunch of underlying POS protocols. Yeah, so essentially high level, that's how we're thinking about things. So now focusing on DeFi integrations on the DEXs and borrowing lending side. We'll keep expanding assets within the Tendermint-based ecosystem for now, but we're also working in parallel for ETH2 and certain other large POS ecosystems. And so those are developments that we'll keep the community updated about. You can follow us on @pStake Finance on Twitter, and we're also available on Telegram and Discord to answer queries for any of the users. Yeah, I think that's high level. All super excited about staking in general. Big fan of fixed income returns, and yeah, happy to answer any questions from the community, or if the staking rewards team has any questions, happy to answer those.
Yeah, amazing. Thanks for the great presentation there. I'm keen on your take, because you are involved with so many verticals of the staking industry, kind of on the protocol level and on the validator level and on the liquid staking level and everything. What do you think is the most what's stopping institutions from starting to stake the most, you think? What kind of factors are that, and what is the role of institutions in the staking market?
Yeah, so I think the biggest catalyst is going to be the merge happening for Ethereum, for ETH2. I think that because there's obviously, I think for a lot of institutions, Bitcoin has been sort of the gateway drug, and it doesn't stop there. So obviously we speak with a lot of family offices and institutions, and a lot of them already have exposure to Ethereum. The thing is, I think forget liquid staking. I think staking in the first place is something that a lot of folks are not familiar with or comfortable with. A lot of people still do not know and this is something I like to talk about, the difference between DeFi staking, so staking of a coin like Aave or Sushi, as opposed to POS staking. So the difference between POS staking and DeFi staking itself is not very well understood, because obviously if you're generating rewards, it comes with downsides as well. In a lot of cases, in some cases it may not also, but especially in the case of POS coins, it comes with downside, usually in the form of slashing, although some chains may not implement slashing. So I think it's just a matter of time. It's a matter of a catalyst event. And again, as entrepreneurs, like my job is to sort of think 6 to 12, 18, 24 months ahead in terms of what are the kinds of solutions investors, traders, and users in this industry would need. And from my perspective, and this is something I've been kind of looking at, like the stats on staking rewards as well. The POS market cap itself is growing. The amount of assets that are locked in staking to secure these networks is growing. And so those are essentially the catalysts for staking itself. And then over a period of time, as folks become more comfortable with DeFi and things like that, I think liquid staking is going to be, super interesting. So I think, I think it's just a matter of time before institutions start staking and then start participating in things like liquid staking.
Right. Do you still see like any big challenges for the proof of stake industry in general in terms of like risks or anything for the industry at large, kind of, that might be holding back institutions as well? That's like not like fully utilized by everyone, because there's certain like there's an uncertainty in the market about proof of stake. Maybe is there anything that you would point out?
I think the biggest one is just regulatory risks. I mean, obviously, there's elements of proof of stake that may, if the US tomorrow decides that that's a security, obviously that's an existential risk for proof of stake as a whole. So I think the regulatory aspect, there's definitely uncertainty from that perspective. Although so far, even though the POS market has become sizable, and specifically with respect to ETH, although that was more when ETH was still using POW consensus mechanism. Yeah, I mean, I think if Ethereum gets classified as a security tomorrow, I think that's an existential risk for the whole industry. I know some teams that are working on like an equivalent of STETH, which is a security, which will be traded on a securities exchange as opposed to trading on decentralized exchanges. And so there are teams that are getting ready for it to be classified as a security. But yeah, I think that is probably one of the biggest risks. I think outside of that, I think maybe like for example, Solana had like a whole bunch of like validators in like one data center, and that data center was but that is more like chain specific risks, where like the chain goes down or chain halts because of centralization of validators and things like that. So I think, and that obviously affects liquid staking and a whole bunch of other things. Like the implications of that could cascade. But yeah, I think those are the kind of high level risks that I foresee. But as long as folks are being adequately compensated for those risks that are being taken, I think it's fine.
Tushar, could you just explain to us how the staking rewards reflect back into the staking derivative tokens? Is there like a redemption ratio that increases, or is this something where the actual STK atom, for instance, goes up in its by just holding it? Like how does the reward reflect back to that derivative token?
Yeah, so and that's an interesting question. So as far as I know, what Staffy is doing is what we call the C token model, which is what Compound uses as well, where you hold one token and the number of tokens remain the same, but the value of that token is going up in value. You have the rebase model, which is what Lido uses, where one STETH is always equal to ETH, and the number of STETH is going up as you accrue staking rewards. In our case, we've taken an innovative approach where we have a two-token model. So we have P atoms and STK atoms. P atoms are essentially just wrapped atoms, so kind of like WBTC. So you can think of them as unstaked atoms. So if you think about proof of stake, today if you stake your atoms, your rewards are coming in the form of unstaked atoms. What we have done is essentially replicated that on the Ethereum side. So for the end user, you first convert your atoms into P atoms, which are just wrapped atoms, and then you convert your P atoms into STK atoms. As long as you hold STK atoms, you keep accruing P atoms as rewards in the background. Both P atoms and STK atoms are equal to one atom. The only difference in property between P atom and STK atom is that STK atoms allow you to earn P atoms as staking rewards. And so what we have realized is that this model, we know like Lido has run into some issues because from a composability perspective, rebase models are not very composable. And so we did not want to use a rebase model. We have internally kind of debated between a two-token model and which is what we're using, and a C token model, which is what Staffy uses. So yeah, I mean, and we decided on a two-token model because I think that allows us to sort of create a few other products that we want to create in the future, especially in the context of early redemption, which is basically doing away with the 21-day unbonding period or the 28-day unbonding period that some of the proof of stake chains implement.
Yeah, it's some great explanation there, and it's interesting to see that Staffy, Lido, and you with Persistence here are using different models to reflect these staking rewards back to the holder. So I wonder like which will eventually win as the most ideal model down the line, 12 months down the line. So definitely still more room for experimentation as well. So one final question here before we wrap you up here. So you obviously had a quite decentralized distribution for Persistence to begin with the stake drop. How important do you think a decentralized initial distribution is for proof of stake networks, and what downstream effects can it have if if it isn't just decentralized with the distribution?
Yeah, I mean, like how do you define what is decentralized enough? Like you could argue that the whole industry is centralized with, maybe 100,000, token holders, across the board. Like is 100,000 token holders, sufficiently decentralized? I don't know. Is, 150 validators on the Cosmos hub, is that decentralized enough? So I think those are sort of existential and philosophical questions. In terms of token distribution, definitely, I think there's, pros and cons. I think a lot of people kind of do not like VCs or, like early investors who get in at like private rounds and get good deals. But, I think there are a whole bunch of VCs that do end up providing quote unquote value, to the network and, help open up some doors and help in different ways. I think in general, if there's any entrepreneurs out there looking to bootstrap a POS network, if you have sufficient capital, would definitely recommend doing sort of a fair distribution, and as fair of a distribution and as fair of a launch as possible, with like majority of the tokens being distributed to the actual users. And I think that's what creates the strongest projects in crypto. But obviously that's a function, like a lot of the things can be fairly expensive in crypto as well. Things like, if at all the project needs to get listed on any centralized exchange, I think that can be pretty expensive. Security audits are pretty expensive. Talent has gotten super expensive in crypto with, so many people making so much money. So I think, you need that initial capital, but, for folks who have that initial capital, I think if you can do a fair launch, it makes absolute sense. Otherwise, try to get investors or VCs that are as value additive as possible, and that help with the longer term sort of bootstrapping of the network.
Yeah, definitely different value adds based on which route you go, but it's up to the founder to weigh those differences. So yeah, it looks like you've had some great success so far, and we're really interested to see where pStake goes down the line. But thank you so much for joining us here today, Tushar. And that'll be a wrap for your segment here. And we will actually